Yes, I can see the screen.
Okay, awesome. All right, so the first bit is quite basic. You've probably looked at it already because you mentioned you had to cover
Yeah.
1, 2, and 3 to obviously complete the assignment. We can maybe look at some of the questions. If you had any questions that you weren't too sure about, we can maybe check that. It's up to you. I'm going to look at the first part, which is just
Actually, I
basics.
do.
Pardon?
There were just two. Yeah, there were just two questions on the assignment that I wasn't too sure about, but everything else was pretty okay.
Okay, that's good. Yeah, I know you
If you
do
can
very
just help me
well
to,
in
yeah.
your assignments. I remember from past modules, you are a high achiever
Yes.
and you do well in all your modules. So I'm sure you probably got most of them right. But yeah, we can look at those two questions and we can see what you had chosen and we can maybe discuss those answers.
Okay.
Okay. All right. So you've obviously got the tax study guide. That's important from a UNISA
Yes.
content point of view. And then there is a textbook. I haven't put a year here because every year the textbook changes because they update the textbook
Changes.
based
Yes.
on the SARS legislation that gets updated during the budget speech every year. So the budget takes place in Feb,
Yes.
and then that budget relates to the
Mhm.
next 12 months. So the tax year for an individual would be from 1st March to the end of Feb the following year. So you would have been required to
Mhm.
use this one. Let me just open up this. Okay, so I've got a tax. Oh, where's it now? It's not here, it's the other one. Um, okay, let me open it. The budget guide here, the 2019 tax budget guide. So I've downloaded a copy from the SARS website, so you guys can obviously, or so that you can actually make use of this. I'll email it to you as well. You should be
Okay.
given information in your past paper that relates to those rules. Okay, they won't give you all of it, but they'll give you some of it. For example, the tax tables. It would be unfair for UNISA to ask you guys to remember the tax table off by heart. That wouldn't be necessary. So you're just going to have to look at the past paper. Obviously, we'll get to past papers. We'll cover some at a later stage, and you'll see that in the past paper, if you look at the last few pages, they always give you some legislation. Okay, they give you the tax tables. They give you a bit of information to make use of when applying the rules. Okay, so that's the only problem with tax, is that it does update year on year. So the textbook obviously changes every year based on the new legislation that comes out during the budget speech. Okay, are you aware of that?
Okay. Yes. Yes.
Okay, perfect. Right, so you probably have a textbook. It's probably the 2020 version, so the one that they prescribed this year. Did
Correct.
you only register for tax this year? You didn't register it for before, and then you just continued it later on.
No, no, no. This is the first time I registered for this
Okay,
module.
good. Okay, so you would have you do have the correct version or the updated version of the textbook.
Cor-
Okay,
Correct. I
perfect.
got this year's textbook.
All right, great. Okay, so yeah, this you've seen before, just in terms of pre-reading, making notes, and application. And if you have any questions, let me know. We can look at them. All right. So first part,
Okay.
quite simple, basics. We're looking at introduction here. Okay, just a little note here about introduction. This is focusing on structure. This is looking at the way government is structured in terms of its system. Okay, remember government is obviously run, okay, by the president and the ministers. And when looking at tax, this is just one part of government, it's separate from government. So, who looks at collecting taxes in the country?
The tax man.
Yes, okay, so SARS will collect taxes, right? And obviously,
Uh,
SARS will be responsible for applying the rules. Okay, who sets the rules?
um, I think it's all.
No, SARS doesn't set the rules. SARS, they administer the rules. So they basically carry out the rules. So they look at the collection. Okay, if you think
Okay.
about the budget speech, did you watch the budget speech this year in Feb?
No, I didn't watch it.
Okay, but Yeah, the budget speech was basically presented by the finance minister. So Tito Mboweni had delivered the budget speech. And remember, the budget speech is delivered by the finance minister. Okay, and obviously the finance minister is responsible for national treasury. Okay, so a little bit of economics here. Maybe you've done the module looking at like money supply, and you've looked at the structure of government and how government buys, let's say, bonds in the market to help stimulate the economy,
Yes.
etc., etc. All of that stuff, right? So obviously, Treasury's role. Okay, Treasury sets the rules. Okay, remember, Treasury is separate from SARS. Right, it has to be separate. They call that like it's almost like segregation of duties, where you've got one
Future.
body setting the rules and you've got another body implementing it, okay, or executing on those rules. So SARS is separate from government and they look at the collection. Treasury is basically government and they decide on the rules. Okay, so National Treasury Finance Minister Tito Mboweni, they deliver the budget speech every year. So the current tax year that you are going to be tested on would be March 2019 to Feb 2020. Okay, that would have been last year's budget. Okay, when would that budget have been delivered? Well, February last year. All right, and that's where I got this tax tables from. Okay, it's from SARS. It's a budget tax guide and it covers all the different bits and pieces of tax that SARS needs to implement from a tax perspective on different types of businesses and entities. Okay, so individuals, trusts, companies, all sorts of businesses, small businesses, so SBCs, micro, whatever it is. Okay, so this is legislation that government passes when they deliver the budget. Okay, and remember, the budget is delivered in February of every year, and that relates to the next tax year. So this tax year has passed. Okay, obviously we're in March 2020. Okay, so when we look at the timeline later, we'll discuss that in terms of the tax return and what individuals have to do or businesses have to do in order to account for their taxes. Okay, is that all right? Is that okay?
Yes,
Okay,
that's
so
fine.
yeah, just remember there are two separate entities. You've got National Treasury, which is government. Okay, so Pretoria, we've got the Union Buildings, National Treasury. Okay, they basically run the country in terms of rules and laws. And then you've got different
Okay.
entities that collect on behalf of government. So SARS is more of an agent rather than government as such. Okay, they're just there to
Mm-hmm.
collect. They're there to apply the rules of law in order to make sure that everybody complies with the legislation. Right, so that's what you'll see in this chapter. If you look at the learning outcomes, it's looking at that. It's describing the tax system. How does tax operate in this country? There's lots of different taxes, right? Value added tax, CGT, donations tax, estate duty, import export. There's such a lot. And we'll look at some of them in this particular module. Right, you do need to be able to distinguish between different types of taxes. So you get indirect and direct taxes. Indirect is a simple one, okay, that
Mm-hmm.
everybody's familiar with is value added tax, VAT. That's an indirect tax. A
Mm-hmm.
direct tax would be pay as you earn. Okay, it's direct
Okay.
because you, as the taxpayer, would have to pay over the tax to SARS. Right, it's your responsibility if it's direct. Indirect, somebody else is paying over that tax that you have contributed to SARS. So, for example, VAT. Okay, none of us pay VAT directly to SARS. All of us pay VAT, but we pay that VAT to the companies, and then those companies then pay it over to SARS. And that's what an indirect system is. Okay, so you get different systems, direct, indirect. You get different rules governing them. You do need to know different types of taxes, just basic classification, and then obviously law. Okay, so law is quite important here because they look at this whole law of precedent. Right, precedent means you refer to cases. Okay, have you done law in the past? Have you completed those? I think they call them business enterprise law or commercial law. Have you done those courses at
Commercial law.
UNISA?
I've done commercial law.
You've done commercial law. Okay, perfect. So you're familiar with
Yes.
contract and you're familiar with this whole idea of legal precedent. Okay, meaning that past
Yes.
cases will affect future judgments. Is that all right?
Yes.
Okay, perfect.
Yes.
Okay, and then in chapter one, the last thing they describe here is the framework. Right, the framework, the best thing that I can relate this to is think of accounting disclosure. Okay, it's just the formats. That's all it is.
Mm-hmm.
Okay, it's how we submit a tax return to SARS in terms of income. Okay, gross income, and then deductions and exemptions and all of that. Okay, so structure is important when you do past papers and when you do practical questions. Okay, obviously UNISA gives you multiple choice at the beginning, and then later on you'll see if you've looked at assignment two, you'll see that's a long type. It's a long question. Basically, it's written. You're going to have to draw up the structure, do
Mm-hmm.
workings, do calculations, and then obviously submit everything. Okay, so that's the only thing that we need to look at here in study unit one. Okay, some general questions. I want to hear what your opinion is, okay, in terms of these different concepts. Let's start off with this one. What is tax, Melanie?
Tax is something that the government imposes on various things, and we are liable to pay like PAYE, VAT. Companies pay company tax.
Yes. Okay, perfect. So tax is revenue for the government, if we had to just simplify it. Okay, so we know businesses need to generate revenue, and they do that through sales or rendering services. Okay, but can government render a service or sell a product? No. Okay, government provides us with public goods and services, but those public goods and services are funded through taxes. Okay, so think of the public hospitals. Okay, obviously, the country or the world, I should say, is going through a very difficult time now with the whole global pandemic. So, obviously, government resources, okay, public hospitals are under constraint, okay, in terms of resources, not having enough. And that's something that lots and lots of governments around the world have had to deal with. So South Africa is quite fortunate in a way because we haven't had such a large spread of the disease or the virus yet. Yes, the numbers are growing, but I mean, we're in a lockdown currently, and I think the last I saw on the news, there were only 3 deaths reported. So compared to China or compared to Italy or Spain, we're actually not that bad.
Mm-hmm.
Let's hope it doesn't get worse and things get better. But the whole point of that is this public goods and services. Right. So the only way we can construct or build more hospitals or roads or schools is if government has more revenue. And that's basically what tax is. Tax is government's income. Okay, that's how they generate income. Okay, they don't sell goods. Okay, they don't provide services. Right, those services they provide are public goods and services. And that's what taxes are used for. Okay, taxes are used to fund those things. Okay, so we're not paying for those things directly. Okay, we're paying for them indirectly, and it's through this system. Right. So why do you think it's important? What is the whole purpose of this tax system? What would you say is the
Government needs
importance?
these funds.
Sorry, say that
They
again.
need these funds in order to they need these funds in order to provide services to us.
Yes. Okay. So tax is important because
Mm-hmm.
it helps to uplift, okay, the economy or to uplift the country. Okay, so everybody needs to contribute basically. So this contribution is in the form of tax. Right, so depending on different people's view, okay, some people view tax more negatively, some people view tax more positively. It all depends. Okay, there's good and bad, obviously, pros and cons. So if I'm looking at importance, right, we're focusing on uplifting the economy, making South Africa better. And the only way we can do that is by helping to contribute towards that upliftment. Okay, building of schools, building of roads, building of whatever infrastructure. Okay, and all companies, okay, they can be foreign or local. You can be a foreigner or you can be a local citizen. It doesn't matter. If people are operating inside the country, they need to contribute to this system. Okay, and that's the important bit. It's basically to provide government with resources. If government doesn't have resources, they're not going to be able to operate the country effectively, right? And that we can see in terms of government's responsibility. Okay, remember, government is there to uplift the country, to make the country better. And they obviously have a responsibility to use those resources to the benefit of its citizens, okay, to uplift the country. Right, who pays taxes?
The citizens of the country.
Only the citizens. We just spoke about foreigners. Do foreigners pay tax?
Companies, yes, they do.
Yes, they do. Yeah, you get non-residents and you get residents. So non-residents are people that
Yes.
maybe come from other countries and they work on contract perhaps in South Africa, and then they leave later on once their contract has expired or ended. So who pays tax? Everyone pays tax. Okay, foreigners, companies, local, international, it doesn't matter. Everybody pays tax. And some people pay more, some people pay less, but it's all part of that system. Okay, government is looking at collecting revenue. Right, when do you pay tax though?
I think it works differently with like VAT and PAYE, company tax.
Yes. Okay. So it does depend on
Yeah.
what type of tax you're focusing on.
Depends.
Right.
Yeah.
So CGT applies in very specific situations. VAT applies in very specific situations. Pay as you earn applies to very specific situations. Right. So this last question is quite important because you've got lots of different study units. Okay. One study unit will cover like income. Okay. And then they'll talk about what determines income. Another chapter will talk about deductions. Okay, and when can I deduct certain things? Another section will talk about provisional tax, or they might look at small businesses and when do small businesses pay tax. So you just have to be specific in terms of the legislation. When I'm using the word when, the when refers to a specific scenario. Okay, so am I a business or am I an individual? Am I a VAT vendor or am I not? So the when does relate to what type of business you're running, what type of taxpayer are you. Okay, you get provisional taxpayers and you get taxpayers that are non-provisional. Okay, non-provisional, provisional taxpayers. And that's also something to consider when looking at this whole idea of when. Right, as an individual, you probably pay tax, well, you probably submit a return once a year. Okay, I don't know if you're a provisional taxpayer or not, but if you are, then it's twice a year. Right, but if you're just a normal taxpayer, then you'd submit a return once a year, okay, a tax return. And that's normally done around August, September, October, November through to December. They normally open the tax year around July-ish, somewhere around there. Okay, so tax return. All right, and those are things that you've probably seen or you've probably done as well as an individual.
Yes.
Okay. All right, just a few other notes here in terms of context. What needs do individuals have? What needs do individuals have?
You're talking about public services.
Well, you can bring that in as something that you could discuss. So, public
Yeah.
services, maybe safety. Should we feel safe in our country?
Yeah.
Yes, we should.
Yes.
So, safety could be something that you could look at as being part of government's responsibility. All right, so if we're looking at providing people with a safe country, obviously we're going to need what? Police. Okay, is health a necessity?
Correct.
Yes, it is. Okay, so these are all social needs, okay, for society. Okay, they relate to society, social. Right, so police, health. Okay, it's relating to people. So if we're looking at an individual, okay, some individuals can obviously provide for their own safety, okay, their own health. But at some point, you need government to step in. Right, so if we don't
Mhm.
have police, you can only keep yourself safe up until a certain point. Okay, so maybe you've got electric fencing around your home. Maybe you have a panic system, a security company. Maybe you've got, I don't know, burglar bars or a camera system, whatever it is. But that's the individual's responsibility. Okay, government has to provide national security. Okay, they need to look after the nation's health, right? And those needs can't only be catered for by an individual. Sometimes they have to be catered for by government. So who must provide for those needs? Well, if we're looking at national security, if we're looking at national health and well-being, okay, if we're looking at safety as a whole, okay, the rule of law, right, that is applied through government. Right, so certain governments, okay, have very strict rules. Certain governments don't. And that's all got to do with this, okay, those needs. Okay, what do citizens need currently? Okay, so if we just think about, for example, Italy, okay, they're suffering the most in terms of the whole COVID 19
Mhm.
story. Okay, and obviously, in terms of needs, government has really clamped down a lot more, okay, on society as a whole in that particular country. Okay, and obviously, other countries have also responded, but again, the needs aren't that high or they're not that big yet. Okay, those needs are still quite small. Okay, so obviously government is there to cater for everyone's needs. Okay, societal needs. Okay, things that the entire country requires. Okay, so it's always big picture. So if you're looking at the South African tax system, it's big picture thinking. Okay, it's the whole country. It's not just how much tax are you paying or how much tax is that business paying. Right? When looking at the entire system, you're looking at what does everyone have to do to contribute towards a functioning society, towards a successful country. Okay, so that's what you're looking at here. You're looking at government's role. Okay, you're focusing on the system. Okay, remember it's applied through national government. Okay, so parliament, right, the president and all the ministers, they are managing that system, right? And then you have people that then administer the system, and that's where SARS comes in, right? SARS is there to provide support in terms of rendering the rule of law, okay, or administering the rule of law, right? Applying the Income Tax Act, applying the VAT, applying pay as you earn, etc. Okay, so how can we achieve the needs for all our citizens? Is it possible to help more
By
people?
collecting
Is it
tax.
possible to make a bigger difference? What do you
By
think?
collecting tax.
Yes. Okay. So contributions. All right. So how do we achieve the needs of all our citizens? Well, citizens, okay? A citizen could be juristic as well. Okay, so you could have a company operating in South Africa. Right. So let's think of a global company. Can you give me an example? A global company that operates in South Africa.
Our company is global.
Which company was that?
It's Male.
Oh, Mali.
Yeah, yes.
Like that.
It's
Is that right?
it's Mahle. It's
HLE.
German.
Oh, okay, yes.
Yeah.
Okay. All right. So, yeah, I'm actually like, while you're mentioning this, now I'm remembering. I remember tires. I think it's a German company. I remember this from long ago. Is that right?
Correct.
Okay, yes. Yeah. So, from what you've told me, if that's a German company, right, the German company can obviously operate in South Africa. Okay. Obviously, as a German owned company, who's reaping the benefits? Well, the German shareholders. But
Okay.
surely, if they're operating in South Africa, they should help contribute to the South African society. So, does your company have to pay taxes in South Africa?
Yes.
Yes, they do. Okay, they would have to comply with the rule of law. They are going to have to pay as you. They'd have to pay as you earn over. Okay, in terms of their employees. So, employees working for Mali in this particular country would have to contribute towards the government's pay as you earn. Okay, same thing with VAT. If you're selling products in this country, you're going to have to pay that. Right? If you're importing and exporting, there are going to be certain duties that could apply, and that will be part of the excise and customs duties that might be applicable. Okay, maybe Mali had purchased property. Okay, maybe you're familiar with this as well. Okay, with property, there's a transfer duty. Right, that's a form of tax.
Yes.
Okay, so
Yes.
basically, to answer this question, how can we achieve the needs for all our citizens? Well, everybody needs to play their part. Okay, all the countries have to, well, all the citizens, I should say, working in the country have to play their part. Right, citizens can be companies, they can be individuals, they can be foreigners, whatever it is. Okay, you get different inverted commas citizens, people inside the country that are benefiting from public goods and services. Because those companies, okay, your company and others, they use the roads, okay, they use the infrastructure, they use the public buildings, the public facilities, the public services. Okay, so those are things that everybody needs and everybody uses. So to answer this question, it's a contribution, right? So when focusing on tax, you just need to remember it's income. Okay, it's a contribution made by the people, the companies, everyone basically in a particular country. Okay, it can also apply for people that are outside the country. So if you are a South African citizen and let's say you decide to go work in Germany for a few months, okay, maybe your company has invited you over as a sponsor and they've sponsored you to work in Germany for a few months. Okay, let's just assume that. But obviously, you're still
Okay.
going to come home. South Africa is still considered your home, and you could then be considered a resident from a South African point of view, and whatever you earn in Germany will still have to be considered as part of your tax return. Right, so you'd actually have to pay taxes
Mm.
on the money that you earn abroad. All right, so the point I'm trying to make is a citizen, somebody that believes that they're part of the country, that they're contributing towards the country's benefit. It doesn't matter, business, individual, whatever, they need to help contribute. Okay, and that's what the system focuses on. Okay, there, basic needs, security, self realization. I've put some notes here. Who must provide for these needs? Everyone. Okay, government has the biggest responsibility because they're going to have to apply the rule of law to everyone in order to achieve certain goals, okay, certain objectives. Right, and then obviously government, okay, acting responsibility for the benefit of the country. Everybody needs to contribute. Right, government can't exist without the support of the people. Okay, support, contribution. All right, so I've just put some additional notes there just to identify those key points. Okay, so structure is key. If we know how the system works, then we can apply it in different situations. Okay, I'm going to highlight a few of these. All right, capital gains tax, very
Okay.
important. Okay, that you'll look at. Turnover tax, they mention it, they discuss it in one of the chapters when we look at small businesses. Okay, dividend tax, not so important. Estate duty, not important. Excise, customs, transfer, air passenger tax, security transfer tax, UIF, skills development, other. Okay, this one, VAT. Oh, I see it's on the same line. Maybe I should split that. Yeah, VAT is a separate tax. It's not part of dividend tax. Okay, value added tax. Save. Okay, value added tax is its own tax. that you would have covered in accounting. Okay, the most important one here would be the CGT, and then obviously income tax. Income tax is quite a big one as well. Well, when I say income tax, we're referring to companies, okay, not individuals. Right, for this module, you're looking at companies, okay, businesses that have to pay tax. Okay, are you familiar with some of these taxes? How many of them do you know?
Yes.
Oh, let me ask you this.
Um,
Which ones don't you know, rather? I think you probably know most of them. Are any of these foreign, ones that you don't know?
no, I'm familiar with all of them.
Okay, perfect. Right, so government has a lot of different sources of income. Okay, and these aren't the only ones. You could even add more of it, more to the list. Okay, one that isn't here, donations tax. We can even add that. Right, there's a lot. Okay, maybe even a fuel levy. A fuel levy would be a form of tax. All right, there's a lot more. Okay, so you don't have to worry too much about all those different taxes. You just need to appreciate that the government applies the different rules and laws to different types of taxes. Okay, the one that we need to look at is this one, the Income Tax Act, in terms of legislation. Okay, the Income Tax Act is law. Legislation, originally legislated in 1962, okay, Income Tax Act of 1962, and obviously there are amendments to this. Okay, so from time to time, government will amend the Income Tax Act and they will then adjust or change certain, let's say, rules, okay, or law in order to maybe close loopholes, perhaps, if people are taking advantage of certain deductions, okay, and they then try apply it more stricter, perhaps. But it all depends. Okay, so legislation changes; it doesn't stay the same. Must the country budget? What do you think?
Yes, they have to.
Yes, and why?
Because there's so much of different things to look at. So
Correct.
there has to be a budget.
Yes. Okay, so government talks about income and expenditure. And that's what they announce in the budget speech. Okay, so this word budget relates to the budget speech. Okay, every year in Feb, they deliver a budget speech. And that budget speech is going to be presenting the estimate. Okay, remember the budget that was delivered in Feb 2020. What tax year does that relate to? 1 March 2020 to 28/29 Feb 2021, depending on whether it's a leap year or not. I don't think it's a leap year, so eliminate the 29. I think this year was actually leap year, if I'm not mistaken. I'll have
This
to go
year was
check
a
the
leap year.
calendar.
Yeah.
Yeah, but that's the tax year currently. So remember, are budgets accurate?
No.
No. Okay, budgets are there just to show
No.
government's like goals.
As a
Okay, what their
guideline.
priorities. Okay, what is government going to prioritize basically? All right, so I don't know if you listened earlier in the week. The announcement came out on Friday, quite late after the market had closed. What happened on Friday?
We were downgraded.
Yes. Okay. Now we are officially in junk status, which is a very, very, very
Yes,
big
correct.
concern because government is now going to have to pay more in terms of interest on their debt. And that's a massive concern.
Yes.
Okay, so I don't know
Mhm.
how much you know about the budget in terms of. Let me see if I can find a little snapshot. I do have one downloaded, but if you think of government, let me ask you just as a test your knowledge type question. How much do you think government spends on interest alone?
I have no idea, but I know that their debt is very, very high. It's like
Okay,
couple
so in
trillion
terms
or
of our
something.
budget, how much do you think we contribute every year? Plus minus, just take a guess.
I would say couple billion.
Couple billion. Okay, it's quite a good guess
Yeah.
actually. All right. Here's a file. Okay, from National Treasury. This came out after the budget was released. Okay, so when the budget was announced in Feb, I think this came out the day after even, and this was obviously issued by National Treasury. If you look at this summary, you'll see here at the bottom. Okay, they talk about budget expenditure. Okay, this is the current budget for the next financial year. So from March 2020 to Feb next year, 2021. Okay, and you can see they're spending 211 billion there on economic development. Okay, and then they obviously allocate that to different subcategories. Learning and culture. Okay, so basic education gets 248 billion, right? The total 396. And you can look at all of this. There's peace and security, okay? There's healthcare, right? 229 billion. And if you look right at the bottom here, have a look at that. That's huge. 229 billion rand
Billion.
is being spent on those debt service costs. Okay, so basically that's funding your debts. So you're also going to do the INV module, the fixed income valuation module. That's a nice module, and it looks at this
Yes.
whole idea of debt, but not debt as an expense, debt as an investment. Okay, because who
Oh,
is South
okay.
Africa paying this to? Well, international countries, okay, or the World Bank, or other lenders. Okay, so our country, okay, South Africa, we're paying this amount in interest.
Mhm.
Okay, that's scary to think that so much
It is,
money is
eh?
being spent just on interest. Right, I'm sure you've probably got some form of debt, okay, be it your home loan,
Yes,
be it credit cards or loans or whatever it is, okay, but imagine
correct.
spending so much on your debt. That would be crazy.
That is
Okay.
crazy.
And that just shows you that obviously government's concerned about this. And that's why when this announcement came out, if you look at some of the news reports, government is very concerned about that. Okay, because now we're not going to only spend this, because remember, this is a budget. This was based on February's knowledge and information. Okay, that's obviously going to increase now because of this announcement. Right, and those are things that
True.
can affect the country as a whole. Right, and that's why the country needs
Yes.
to budget, because the country needs to know how much resources are we going to have. Okay, are we going to need to collect more taxes? Right, the answer is
Mm-hmm.
probably. Okay, so unless government can cut more of the expenditure, okay, if they can't do that, then they're going to have to increase this. And the only way they can increase that is by applying more
Increasing
taxes.
taxes.
Yeah, so we don't know what's going to happen going forward, but things aren't looking so good. But let's hope that things improve and get better. But yeah, that was something that
True.
came out last week on Friday relating to this whole budget story. Okay.
Mm-hmm.
All right. How's your law, Melanie?
Um, I only did like 2 law subjects
Okay,
with
but are you good
my
at like
degree.
case law, and can you remember different cases and that type of thing? Like how's that?
No, not so good.
Not so good. Okay, so just a note for this module, you do have to
Okay.
know some of the important cases,
Case law.
not all of them. Okay, just some of them.
Okay.
You'll see in the notes I've actually given you some tips in terms of how to remember some of these cases for different situations. Okay, because when you have
Okay.
theory questions, UNISA will ask you some theory questions. If you've looked at some past papers already, you'll see they always ask you some theory questions in terms of like a scenario where they give you a scenario about a taxpayer and they talk about something. And then you've got to always relate this, okay, to law,
Okay.
to case law. Right? And it's quite a good idea to remember some of the important ones, because if you outline those cases, if you insert those cases in your response, okay, in your answer, you are going to get
Mm-hmm.
marks for that. And that's obviously good in terms of your performance in your exam. Okay, you want to get the maximum
Okay.
possible marks as much as you can. So some are more important than others. You don't have to learn a big list of cases. You'll see even the textbook's quite good. The UNISA study guide even highlights a few of those important cases. But you can either Google them and you can actually read more about them because this is legislation. It's public information. So some of it you can find online. Some of it you've got to actually go to like a law library and you've got to actually read about it. But you're not going to have to go that in depth. Okay, you'll see when we look at some of the cases, all you literally need to know is like what was the case called? Okay, so the name, was it the Lartigon case, or was it the let me just think, what are the other ones? There's a few. I can't think of some offhand, but there's a few important ones that you'll need to know when we look at like income or when you look at deductions. Okay, there's a nice one we'll look at where we actually use like an analogy and we talk about like what does it mean in terms of it's like a boat. I think it's the Fisher case. That's it. That's it. Now I'm remembering Fisher. And then I'll give you something like
Okay.
to fish. Okay, and then you can remember that for your exam, and then you can remember the Fisher case. Right, so there's a whole bunch of different cases, the more important ones. You don't need to know them all, but maybe just take a note of the ones that are more important, and then when you get to the exam, you can just jot them down, or not jot them down, but just jot down the ones that you need. So maybe go to the theory question and look at the theory question and see, okay, what is the theory question asking? Okay, is it relating to income? Okay, if it's relating to income, okay, then let's discuss that case, depending on what you're dealing with. Okay, so those are just some tips,
Okay.
but we'll look at it and we'll highlight the ones that are important. Is legislation set in stone?
No.
Why not?
Because I think when legislation is put down, there's always things that arise or come up in future,
Yes, very good.
and then
Okay, so
people have to obviously argue their points.
correct, perfect. Right, so with legislation, case law actually creates more rules in terms of like judgments and so on. Okay, so judgments always have to look at previous cases, right? Because of that whole law of precedent. It comes back to what we said earlier when we saw law of precedent as being one of the learning outcomes in this particular chapter. Okay, just remember and just appreciate that when looking at legislation, it's continuously changing. So, for example, let me think of like accounting and how that changes. Even that gets updated. IFRS. Okay, so all
Yes.
professional bodies, SICA, the South African Law Society, all of them basically look at updating and keeping their industry relevant. Okay, so when new laws come out, so for example, carbon tax, that's relatively new, or even more new, sugar tax. Okay, those are new items, okay, in terms of legislation that will then add to this whole idea of law and building more, let's say, building a body of knowledge, basically. Okay, and that body of knowledge is going to be used, okay, in different scenarios to apply the rule of law. It's basically used as evidence, as supporting evidence, as support, okay, in different cases. All right, so it's always like a building block. It starts and then it keeps building and building and building and building and building. All right, and that's why lawyers have to always stay relevant. They need to look at cases because those cases, those judgments affect future cases, and that's why you always have to stay up to date. Okay, does that make sense?
Yes.
Okay, just something else that you might see. Okay, when you read through the textbook as well as the study guide, there are certain practice notes. Okay, and practice notes aren't part of legislation per se. A practice note is how SARS will apply the rule of law. Okay, so when looking at legislation, remember it's interpretation. Okay, so sometimes when SARS applies the rule of law, okay, they issue practice notes to give more detail on how they're going to apply this whole idea of interpretation law of precedent. Okay, because remember, it's based on past judgments. Okay, so what happened in the past will affect the future, and that's what they're looking at here. So practice notes are there just to guide the tax collection. Okay, who manages taxes in the country? We spoke about it earlier. Do you remember?
SARS. SARS.
Good. Okay, SARS stands for?
South African Revenue Services.
Good. Okay, I've put a note here. They're autonomous. Autonomous means they can make decisions on their own. Okay, they're not controlled by government. Okay, so autonomous means not controlled, independence. Right, it's an independent section of government because you have to keep treasury separate from SARS. Okay, you can't set the rules and then also collect the taxes. Right, it has to be separate because there might be a possible or potential fraud and corruption, and obviously government wants to eliminate that as much as possible. Right, so you've got SARS here and you've got treasury there, and they're separate. Okay, decisions that are made here are separate from the decisions that are made there. Okay, and that's how government operates to keep everything separate. It's like segregation of duties. For example, in a
Yes.
company, right, you'll have different people doing different things, okay, different roles. Right, so here's one role, collecting taxes. Here's another role, spending the taxes. Okay, because government is going to use the money that's collected to then run the country. All right, so I've just put a note here, administered by the commissioner. Okay, commissioner of SARS. Okay, remember, South African tax regime is set by National Treasury, so they set the rules, and then it's administered. Administered means it's going to be carried out by the commissioner. Okay, when we talk about the commissioner, we're looking at the SARS commissioner. Okay, the current SARS commissioner, let me think now. I think it's Kieswetter, if I'm not mistaken.
I'm not sure.
Okay, SARS commissioner, 2020. I think Tom Mayani was the previous commissioner, then he was obviously, yeah, it is there. SARS commissioner, Kieswetter. Okay, he's the current SARS commissioner that basically applies the rule of law. Okay, so that's different. Okay, remember, the commissioner doesn't deliver the budget speech. Okay, the commissioner is there to apply the rules. All right, who delivers the budget speech? National Treasury, Tito Mboweni.
Yes.
Okay. When you look at cases, sometimes you'll see this. Okay, the Commissioner
Yes.
of Inland Revenue. Okay, when you see the Commissioner, they're always referring to SARS because when you look at more of the chapter, I don't know if it came up in chapter 1, it might come up in chapter 2, I'm not too sure now where it is, but they talk about disputes. Can you dispute matters with SARS?
Yes, you can.
Yes, you can. Okay, and there's a process that you need to go through there. And
Yes.
sometimes the process goes so far, it even goes to court. Right, and then in this chapter or
Yes.
the next chapter, either or, I forget which one it is, it's either one or two, they talk about the different levels of government, okay, in terms of the courts. Okay, you
Yes.
get the Supreme Court right at the top. Actually, Constitution.
Yes.
Okay, the Constitutional
Yes.
Court, the Supreme Court of Appeal, all of that. You'll see the different rankings. And then you get the High Court, and then you get lower courts, you get labor courts, you get divorce courts, you get what else?
Family court.
Family courts, yes. Small claims courts. There's such a lot. Okay, you get different types of courts dealing with different matters. Okay, so those disputes are then settled in court, and that's why when you look at case law, you'll often see the word commissioner come up. When you see the word commissioner, they're referring to SARS, where SARS has had to either defend themselves because a client or a taxpayer has taken the commissioner to court because they disagree with the rules, or SARS is going after a taxpayer for non-compliance. It could be either or. Sometimes disputes need to be settled in court, all right, and that's where we make a judgment, all right, and that's where case law comes into it. Okay, case law looks at those judgments, right? So when I spoke about some examples, the FISA case, okay, that's one case
Mm-hmm.
that you'll know later on, and then you can use that. All you need to remember is what's the case and what's the judgment. That's all, and then you can relate it to different situations. Okay, you don't have to know the details. If you're really good at law, that's why I asked you how good is your law, because
Oh.
some students are just brilliant. They have a really good memory, and they can recall all the facts of the case, and they can talk about the case and all of that. If you're that type of student, then you can really impress the marker by adding more detail, right? But from a mark allocation, I'm just talking from other institutions' point of view. Other institutions that I've seen mark
Okay.
this, they look at the case and they look at the judgment and they see, well, did you provide the correct case to motivate a particular view in terms of the judgment from that case? And that's normally what they look for as inverted commas bonus marks. Right? It might be marks that you would have to get in terms of the required, but it's normally a bonus mark. I've never seen UNISA's marking in terms of mark allocation because they don't give that to you. Um, they
Yeah.
they're quite how can I say, private or confidential. They don't post memos for whatever
Yes.
reason. I don't know why. Other
Mm.
institutions do.
Yeah.
Like WITS, UJ, all of those institutions, they give out memos, and then you can actually see where they marked or where they gave
Hmm.
marks, and they always give marks for this. So I'm assuming it's the same at UNISA as well. Okay. All right, just a few other things, and then we've covered study unit one. How are you taxed in the country? There's two systems. Okay, I mentioned it earlier. I'm going to cover it in detail here. Okay, you get a residence basis of tax, and you get a non-residence basis. Right. So, what determines a resident? Any idea? Or define what a resident is.
I would assume a resident is someone that lives here and has an ID of residentship.
Yes, it can be. But what happens if you're a South African citizen but you're working in Germany? Are you still a resident?
No.
Possibly, it depends. So there are a number of tests. They call this the physical presence test. Okay, I'm just writing PPT. It's not PowerPoint presentation. It's the physical presence test. Okay, government looks at, did you spend 183 days in the country? Question mark. All right, and they look at that as part of the test. Right, if you've spent more time outside the country than inside the country, then you might be considered a non-resident or a resident depending on the amount of time that you spend. Right, but they always look at they call this the inverted commas, where are you going to call your home? Your basically return home. Okay, so in other words, where do you consider being like, where do you consider your home to be? Is your home South Africa or is your home Germany? Right, where do you return basically? So that's something that they use as part of the discussion. I think I do have a note about this in one of the chapters. I don't think it's in this one. Let me just see. Yeah, no, it's not in this one. There is a little note about this whole idea of uh, it comes up in the companies one. Okay, I can remember now. Okay, when you look at companies, they talk about where is the headquarters, the HQ. Right, are the headquarters based in Germany or are the headquarters based in South Africa? If the headquarters are based in South Africa, then you would consider the company as being a residence. Right, and then they would have to comply with tax law in the country, in South Africa. Right, if they're a non-resident, then it's different. Then they look at companies paying tax in other countries, and that's a bit different. All right, so just a note here, double tax agreements, they do exist. to avoid being taxed twice. Have you ever heard of a double tax agreement, a DTA?
No.
Okay, a double tax agreement is basically if you're earning income in South Africa
Mm-hmm.
and it's being taxed in South Africa, it can't be taxed twice. Right, so if you've got, let's say, a company in Germany or you've got a subsidiary in Germany, okay, and the head office is in South Africa. Right, if you've paid tax in Germany, the government is not going to also tax that income in South Africa. There are certain double tax agreements that are in place to avoid companies having to pay tax twice on the income that they've generated. Because let's say you've made, I don't know, 100 million. Okay, maybe Mali's a big company and they make millions of rands a year. All right, let's just say it's 100 million, okay, or even euros, whatever it is, okay? Let's say it's euros and they make 100 million euros. Okay, if it's 100 million euros, obviously there's going to be taxes paid in that country, but then that company might be headquartered in South Africa, and then they are going to have to pay tax in South Africa as well. So instead of paying tax twice on your income, governments have this, a double tax agreement, so you only have to pay tax once, right? And they use that to try avoid people having to pay too much tax on income, because remember, income is income. Income could be
Mm-hmm.
in Germany, but it could be taxed in South Africa. Income could be in South Africa, but it could be taxed in Germany, right? So it's just something else that's additional, that looks at the different ways that government looks at collecting income revenue. Okay, so all we need to remember is what's here. Right, a resident-based tax anywhere in the world. Okay, so if you're a resident in South Africa, do you consider yourself a resident of South Africa?
Yes.
Okay, so you're not going to be submitting a tax return to the, let's say, the US. Right, but
No.
maybe you're doing work and there is some sort of US income. Okay, or maybe you're doing work in Germany and there's some German income. Or maybe you hold, even, I don't know, maybe you hold investments, okay, and the investment is a foreign investment. Okay, that foreign investment is obviously going to be taxed in South Africa. Okay, worldwide basis, anywhere in the world. Okay, why? Because you are a resident. If you're a resident, it doesn't matter where you are. If you're in the US, if you're in Germany, it makes the difference. Anywhere, you'll be taxed on that income. It'll be part of your income, it'll be part of your gross income. Okay, and then a non resident, then they only get taxed on a South African source. Right, so if you're a non resident, meaning you're not a citizen of the country, right, so for example, let's say a German person, someone from Germany, okay, a German comes to South Africa, okay, and they work for Mali in South Africa.
Mm-hmm.
Okay, if they're working for Mali in South Africa, then they would be considered non-residents. Okay, and then they would only pay tax on the income they earn in South Africa. So that's a little bit different. All right, so if that individual is earning money in South Africa, then they'll have to pay South African taxes, right? But only on the source, the South African source of tax. Okay, there's a really good summary on page 26, looking at the different classifications, direct and indirect.
Yes, I've seen that.
Have you seen it?
Yeah.
Okay, let's go and look at it quickly. Do you have any questions about it?
No.
Okay, great. So it's this one here. Let me close the budget guide. This we don't need for today. Actually, let me leave it open. I might need it. Let's see. This one is 260. Yeah, 202. Okay, page 26. I hope the page number stayed the same. They might have changed actually. 26. No.
Yeah.
Okay, yeah, the page
It's
number
page
has
17.
changed. Yeah, the
17.
yeah, in your version of the study guide, Okay, classification of taxes is on page 17. Yes. All right. So yeah, sorry about that. The notes are
No, it's fine.
yeah, the notes are referencing an older version of the study guide, but yeah, it's the same. It's the same table. The table hasn't changed. Okay, so what taxes are levied on income? Okay, those are some of the different types of taxes. Okay, and then you've got this, the method. Okay, so what taxes are levied on income, consumption, wealth, other? These are the levied taxes, taxes that are applicable to different taxpayers. Okay, you've got proportional, and you've got progressive, and you've got regressive. What system does South Africa use? Do you know?
No.
Progressive, proportional, regressive. Which one?
The progressive.
Progressive, yes. The more you earn, the more you
Yeah.
pay. Right, so if you look at the tax tables, have a look. If we're in that bracket, we only pay
Yeah.
26%. If we're in this bracket, we pay 18%. If we're in this bracket, we pay 45%. Do you see that?
Yes.
Okay, so those are the different tax rates that are applicable to individuals and trusts. So depending on how much taxable income you have during the year, you as an individual are going to pay tax according to this table. Right, so the highest tax that you can pay in this country is 45% in terms of the rates. The lowest you can pay in this country is 18%. Right, and then depending on your gross income, your taxable income after deductions, you will fall into one of those tax brackets. Okay, we will use a tax bracket, but not this one. The one that we'll use is the one for SBCs. This is used. No, that's retirement funding. This is retirement. That's for your pension fund and your retirement. And if you retire or get retrenched, okay. So this is not applicable for what we're discussing. Let me just make it smaller. Here, I think I went past it. No, that's travel allowances. Turnover tax. Yes. Okay, there's one. Turnover tax. That's something that we look at when we look at a micro business. Right, that comes up in one of the chapters. Okay, we'll look at that. Okay,
Yes.
see, this is a tax table. It's a progressive tax table. The more you earn, the more tax you pay. 3% is very little though. Okay, micro businesses are really good.
Yeah.
3% compared to companies which pay 28% tax. Right, and remember, companies pay 28% tax on the first rand that they earn. Right here, if you earn between 0 and 335,000, you're going to pay nothing. And that's for a micro business. But you have to meet the requirements for being a micro business before you can apply this. And that's where the legislation comes in. Right, and there's another tax table. There's a SBC. Let me show that one to you as well. It's somewhere here. SBC, where are you? Too far. Okay, different types of businesses pay different types of tax. There, okay, it was further up, not further down. There's it. SBCs, micro businesses. Okay, so you will see this in your module. Okay, in this particular module, Tax 2601, they do differentiate between SBCs, micro, and normal. Okay, that's later
Yes.
on. Okay, oh, yeah, this, but, okay, back to where we were. Okay, so all of these taxes apply to different situations, okay? If I have direct tax, remember direct means paid to SARS. Indirect means paid to someone else and then paid to SARS. Is that okay?
Yes.
All right, so proportional means it's a fixed percentage. Right, VAT, is VAT proportional?
It's fixed. Yes.
Okay, VAT is fixed. It's 15% and it's 15%. It doesn't change. Does that make sense?
Yes.
Okay, progressive. Certain taxes are progressive. Income tax is progressive. Okay, regressive means the more you earn, the less you pay. Okay, that would be great, but that doesn't apply in South Africa. Okay.
Yeah.
All right. So in South Africa, we use these systems, okay, in terms of the method. How do we calculate tax? It's either proportional, fixed percentage, or it's progressive, and then it's looking at these tax tables. Okay, so you will see these tax tables in your past papers. They have to give it to you. They can't expect you to remember that off by heart. Okay, that would be very
True.
unfair. Right, so you will see these tax tables in your past paper formula sheets. Okay, so you don't have to study these, you just have to know how to apply them, that's all. Okay, and we'll look at that when we get there. Right, and then just what taxes are levied, and then these are just different categories. Okay, so income. Income means I've earned income. Okay, I've done something. I've either rendered a service, I've provided a product, I've done something. Okay, maybe commission, okay, or a sale, that type of thing. Okay, consumption is where you're actually purchasing something for use, okay, to use it up. So that is consumption, buying goods, buying services. Imports and exports, that's part of consumption. Okay, those are just different examples. And then wealth taxes, capital gains tax. Do you know when that applies? Any
I
idea?
think when
Capital
you
gains.
buy like property
Yes.
or
Good. Property or any other
okay,
substantial asset of value. Okay, even investments, depending on how
yeah,
long you've held them for. Right, if you've held them for a long period of time, then you would fall into that category, capital gains tax. Okay, if you sell a house, you could also have CGT and you could also have transfer duty, but transfer duty is paid by the buyer, okay, not by the seller. Okay, if you're buying property, then you pay the transfer duty. Okay, but if you're the seller, you pay the capital gains tax because the seller will make a profit on the sale, hopefully, depending on how much the house is sold for. Right, all of these taxes are considered wealth tax. All right, the reason why they're wealth taxes is because it relates to an estate, okay, your possessions. Right, so think back to accounting, assets and liabilities.
hmm.
Okay, that's what we're looking at here. Right, so when you die, do you pay taxes?
Estate duties.
Yes, that's called death taxes. Okay, so when you die, what they look at your estate. Okay, your estate is then going to be left to your spouse and your children. All right, so your assets minus your liabilities gives you your wealth, and then they tax that. Okay, there is an exemption though. So the last I checked, it's 3.5 million. Okay, so if you have an estate that's less than 3.5 million, you won't have to pay any estate duty in addition to what you're paying already. But if your estate is greater than 3.5, then you do. All right, then estate duty starts kicking in, and then they start charging taxes on your wealth. Right, so taxes. Remember that question I asked earlier? When does tax apply? There's a lot
Yes.
of different situations. When you buy stuff,
Hmm.
tax can apply. When you die, tax can apply. When you have other scenarios, okay, transfer duty, security transfers tax, fuel levy, dividend tax. There's such a lot of different scenarios. They all apply in different situations. Okay, does that make sense? Are you okay with this table?
Okay. Yes.
Okay, this table is quite
Yes.
important because I've seen questions talk about this, the different systems. I've seen questions about this, direct and indirect. I've seen questions about different types of taxes. So it is worthwhile going through this and just studying it and just recalling what the different types of taxes are. Okay, this is a nice summary. That's why I put a note about it. It's perfect. You don't have to redraw it or anything like that. Just appreciate it. Okay, how do you think tax is calculated? Any idea? What tax
Um,
calculation?
yeah, are you talking about VAT, PAYE, company tax,
Just in
all
general, it could be any tax. What do they have to do? What does SARS do when they look at your tax?
okay. In terms of income, it
Yes,
all depends on your tax table. It's according to what you earn,
good.
and that is charged at 15%, and those are things that you would purchase for use.
Yes, okay, good. So you're right. So when looking at the tax calculation, we need to look at this. Progressive,
Yes.
proportional, regressive. Okay, the tax calculation depends on the rules. Okay, you mentioned income.
Mm-hmm.
Okay,
Yeah.
what is income? That's the big question. Right, income is income, but when is it considered income? Right, that's something to consider. So if we're looking at the actual calculation as such, that calculation is based on the taxable income. And that taxable income will be applied to these rules depending on whether it's proportional, regressive, or progressive, depending. Okay, so the tax calculation is separate from the income calculation. It's important to note that. Right, so when you do your
Mm-hmm.
tax return, okay, when we do examples, you will see we list everything, okay, and then we get right to the bottom. Right at the bottom, we want one thing, we want our taxable income. That's what we want.
Mm-hmm.
Because once we've got the taxable income, then you apply these rules. Then you look at these tax tables. Okay, and then you apply the rules. Right, so what do you need to do to calculate tax? You always need to determine the taxable income. Okay, because
Income.
that income that's taxable is then going to be used to calculate how much tax is paid. Okay, so the how much tax is paid is separate to how much income is taxable,
Taxable.
if that makes sense. Okay, so income is a separate
Yes.
calculation. Okay, the tax that's going to be charged on that income is a separate calculation. They're two completely separate things. I don't know if that makes sense. Does that make sense? Or did you
Yes, it
follow
does.
that?
Yes. Yes.
Okay, so you'll see there's a whole bunch of rules that we need to look at in terms of income. Okay, what is income? What determines income? And then we need to bring the income into that taxable income. Once we've got taxable income, then we start working out the tax. Okay, so the tax that I'm talking about there is the actual amount that you pay to SARS. Okay, that's calculated based on the rules and how much taxable income you have currently.
Mm-hmm.
Right. Oh, it was in this set of notes. There's it. Okay, I've got it here. If
Mm-hmm.
disputes arise. Okay, this is from the textbook. Okay, this is a really good summary. Right, the taxpayer, okay, or SARS, either or. Have you ever had a dispute with SARS?
No.
Okay, sometimes you might have to go into the SARS branch, okay, to dispute certain things, perhaps. Okay, depending on maybe your taxable income. Okay, maybe they've overstated it
Yes.
or they've understated it or whatever the case might be. But
Mhm.
sometimes there might be a situation where a company, okay, public or private, it makes no difference, okay, and they've got to dispute, okay, or raise an objection. Right, the process is quite simple. You first object, okay. If you object and SARS then admits that they've done something wrong, okay, and they fix it, then you don't have to you don't have to move to the next step. Okay, if they oppose your objection, then you still have an appeal. Right, you can then say, well, no, I don't agree with your objection. Okay, notice of appeal, notice of objection. Okay, these things come up quite a bit in test questions. Right, if the appeal isn't successful, then what do? You have to look at alternative dispute resolutions. Okay, so now we're taking legal action basically.
Mhm.
This is where the legal action comes into it. Okay, so the first part, SARS and tax, not SARS and tax, taxpayer and SARS. Okay, SARS and the taxpayer. They
Mhm.
have those first few steps to try sort out their own problems. Okay, so you have a problem with SARS, you go into the branch, you discuss it, you raise an objection. If it's not successful, you can appeal it. After the appeal, if that's still not successful, now you start taking legal action. Okay, this is where it gets expensive. Okay, so once you start taking it to the courts, then you've got to obviously either represent yourself or you need a lawyer to assist you with that, okay, or an attorney. Right, so the alternative dispute resolution process, tax board, tax court, high court, Supreme Court of Appeal, and then the highest court in the land. the Supreme Court, not Supreme, the Constitutional Court. Okay, Constitution, remember, what does the Constitution deal with?
Matters of constitutional issue.
The Constitution? What does it deal
It
with?
deals with matters with constitutional issues.
Yeah, so what are constitutional issues?
Anything that's if there's a dispute regarding things that are that has been put into the constitution.
Okay, what do we call those things? We call those our rights, right?
Yeah.
Okay, so the Constitution outlines the Bill of Rights. So if we're looking at the Constitution, that's the highest court in the land. Okay, remember, South Africa has a very strong legal system. Okay, we have a constitution, and that constitution protects our rights, and that's the highest court. So, for example, if we're looking at the beginning, okay, maybe you disagree with SARS because maybe they didn't allow you to deduct certain expenses. Okay, you can object that. You can appeal that. If you still don't agree with that, you can take it further and further and further. You can even take it as far as the Constitutional Court if you believe that your rights aren't being upheld. Okay, if you believe so firmly that, well, I should be able to claim a particular deduction, but based on the rules, I cannot. So SARS says you cannot. Okay, you take that further. Right, maybe it goes to the court. Okay, remember we spoke about the court, we spoke about cases. Okay, what do previous cases say? Do those cases motivate for or against your argument? Right, if it motivates against your argument, maybe you'll lose that case. Okay, you'll lose that case. Right, then you can still go further, take it further to the High Court, to the Supreme Court of Appeal, and then further to the Constitutional Court. If your matter is believed to be unconstitutional. Okay, and that's as far as you can go in terms of law. Okay, this is just the structure of the law system. Okay, this is how the system works. Right, so if you have a dispute, and it can be anything, it doesn't have to be tax. It could even be labor, for example. Right, if I take it something different, labor. Okay, maybe you have a dispute with your employer. Okay, maybe they've treated you unfairly. Maybe there's, I don't know, a CCMA case, whatever it is. Okay, these are common things that can occur. Okay, between the employer and employee. Right. So what do? Obviously, you don't take it to the CCMA immediately. What do? Employee, employer. Okay, and you try to resolve that yourself. Okay, maybe you object, maybe you appeal, and it doesn't go any further than that, because maybe it's resolved. But if it isn't resolved, then what do? You take it to the alternative court. Then you go CCMA, then you go labor court. Okay, and if you don't get any remedy, how far can you go? Well, you can go right up until the Constitution. Right, if you believe the employee isn't doing the right thing in terms of fairness, in terms of rule of law, in terms of rights. Okay, does that make sense? Does that like paint a picture?
Yes. Yeah.
Okay, so that's how the court system works in the country. Right, remember disputes are resolved as best as possible right at the beginning. Okay, but if there is no resolution and no one can come to a conclusion, then you start bringing it further and further and further. Okay, the only time it gets taken to the court, the Constitutional Court, is if you don't agree with the rights. Okay, if you believe it's unconstitutional and so on. Okay, and most cases never get there. Okay, unless it's something major and it actually relates to, let's say, specific rules, okay, or specific rights. Okay, maybe just to think of one, freedom of speech and journalists. Okay, there was a few cases that went there in terms of like, what is the, let me think now, what was that case? It was in the news. One of the, what is it? Sure, I forget now. But it was basically a matter in terms of, is it fair? Is it just? Okay, that was the consideration. and those cases get taken to the constitutional courts. Okay, make sense?
Yeah.
Perfect. Right, these are just some rules in terms of admin. Okay, so with everything in life, there are certain like cutoffs and that type of thing. So when lodging an objection, you have to do it within 30 days from the date of assessment. Okay, that's important. Date of assessment means when you've actually worked out your tax liability, okay, what you actually have to pay over to SARS. That's the assessment date. Okay, from an individual's point of view, that's called the IT34. Okay, you normally get that after you've submitted your return. Okay, so a taxpayer must specify the grounds of the objection in detail. Okay, they obviously need to fill out a form, notice of objection, and that obviously gets filed. Okay, with e-filing. Okay, remember e-filing is the system that's used nowadays because of technology. Okay,
Yeah.
technology has changed the way people have done things. In the past, you literally had to go into the branch and you actually had to sit in the queue and then you had to file your
Yeah.
income tax. Now it's a lot better. Okay, I don't know. Do you use e-filing or does someone else do it for you or do you do it yourself?
No, I do it myself.
Okay, you
E-filing.
probably use this as well, hey?
Yes.
Yeah. Okay. So e-filing works the same for companies, right? The taxpayer. The taxpayer can be an individual or it can be a company. It doesn't matter. Okay. All taxpayers, irrespective of how they are structured. Okay. They can be partners. Okay. Husband and wife. Okay. So maybe if you and your spouse are married in community of property, right? Then you'd also have to submit your taxes, but as individuals. Okay. And then just split the benefits, the income, the interest, etc. Okay.
Okay.
Right. Just in terms of the appeal, very similar. Notice of appeal. That's the form. Also, 30 days. Okay, so 30 days, 30 days. Quite easy. Most of it's 30 days actually. There are some situations where
Mm-hmm.
it's a bit shorter, but we'll look at some of them if we get any of those specific questions. Right. There's also a 60-day approach, not a 60-day approach, a 60-day let's say duration, okay, where they do provide for time, okay, in terms of notification. So SARS will obviously have to notify the taxpayer, right, if there's any allowance, okay, or they call it an allowance because they're basically looking at your your motivation, okay, or your evidence, right, in terms of the objection, right. So they do give you
Okay.
time. They give you time to appeal. Have you heard of this concept, burden of proof?
No,
Even from law, have you not covered that burden of proof?
I can't remember.
Okay, all right. Burden of proof means who has to provide the evidence, basically. Right. So if you go to SARS, let's say you go to the branch, okay, and you are going to dispute something on your tax return. Whose burden of proof is it to prove that you're correct? Does SARS have to do that or do you have to do it?
Yours.
Yes. Okay, you've got to do it
No, I
because
would have to
you
do
are
it.
making the accusation, you are disputing a matter. So you
Yeah.
have to get your facts correct, basically. Does that make sense?
In order. Yes.
Okay, so burden of proof lies with the person making the accusation, okay, making the dispute. Right, so if you're disputing something, you've got to motivate, you've got to show the facts. Right, if SARS disputes something, then who does the burden of proof lie with? If SARS
Um.
is disputing something with the taxpayer, who needs to motivate? Who needs to provide the burden of proof?
Yeah.
Yes, SARS. Okay, then they'll have the burden of proof. Okay, does that make sense?
Yes.
Perfect. Okay, then just a note here, calculating taxable income. This is the structure. Okay, this we will see in later chapters when we actually look at it. And you will see each chapter covers a specific topic. Deductions and allowances, that's one chapter. Income, that's another chapter. Capital gains, another chapter. Right, so the structure in Tax 2601 is really good. I like 2601 because it's structured very well because each separate unit is a separate consideration. Okay, income is its own chapter, deductions, own chapter, capital gains, own chapter. Right, this structure will never ever change. Okay, so this structure you can write down, okay, when you are approaching your exams. And when we look at exams and past papers, I'll show you exam technique. What I do is I write down the structure, but I leave lines, and then you can put in your workings. Okay, sometimes you can even do it over 2 or 3 pages, depending on how long the question is. Right, but just apply good exam technique. Okay, you need to know the general structure, layout, format, disclosure. Okay, earlier we spoke about how important this is. What do you use taxable income for? What is that used to calculate?
To calculate the tax.
Perfect. Okay, remember the tax calculation is separate from the taxable income calculation. Notice the heading for this slide. Calculating taxable income. It's not calculating tax. Okay, calculating tax is separate. That follows legislation. That follows the tax tables. There's the calculating tax. See? Now we've got it. Right, using the taxable income, now we calculate the normal tax. Okay, and then you'll consider other things that you've paid. Prepaid taxes, provisional tax. You have provisional tax is important here because you do cover that in one of the chapters. You get the first, you get the second, you get the third provisional tax payments. We'll discuss what those things are later on. Okay, and then what do we actually pay over to SARS there? Okay, you might get a refund. But as an individual, depending on how well you've structured your taxes, if your income, okay, has been added up and you've taken all your deductions, okay, normally for most people, okay, those deductions help you to land up with that, a refund, okay, because you make contributions to medical aid, you make contributions to pension, you make contributions to retirement annuities, right? You might even donate, okay, whatever it is, right? And that reduces your taxable income. Okay, so you don't have to comment on whether you've had to pay SARS or not pay SARS, but for most people, all right, they're probably sitting on this side of the diagram, okay, where you've actually received a refund from SARS. Okay.
Yeah.
Just a note here, NB individuals are taxed according to the progressive individual tax table, and this is reviewed annually by the finance minister, okay, as part of the budget speech. Well, I think that's it. Oh, yeah, there's one bit, and then this is basically a continuation, okay, in terms of next week, okay, well, not next week, of Thursday. I'll cover more with you on Thursday when we'll look at chapter 2. We'll just cover basics relating to the structure, and then we'll get into the calculations later on. Okay, study unit 1.
Okay.
Discussion. Okay, looking at an example. Right, looking at this. There's the dates. Okay, that's the tax year. The tax return deadline happens after the tax year. Right, so if we're looking at the current tax year, let's change this. Let's make this 2019. 2020. Okay, Melanie, can you give me some examples? What can happen during the tax year?
Maybe you'll get another job.
Okay, so if you change job, what can happen?
You could be working 2 jobs.
Yes, so you'll have
If you
multiple
work
sources
2
of income.
jobs, what if you worked? Yeah.
What else?
What if you take an investment?
Good.
Earn foreign income.
Okay, you've looked at income a lot. What else? Think of the other half of it. Think of the expense side. What else could happen?
Medical. What about medical expenses?
Medical expenses. Very good.
Yeah.
Okay, for an individual, that's definitely applicable. Right, so medical expenses, better word, deduction.
Yeah.
Okay, some of it can be deductible. All right, so there's a lot. I've put some notes here. earning income, pay as you earn, receiving income, contributing to a pension, a medical, right? And then later on, it's reconciled, right? So I'm sure you're quite familiar with the process because you even do your own e-filing, which is great. So you're probably very familiar with this, right? What document does your employer give you around June, July, May, June, July? Do you know?
IRP5.
Correct. Good. See, yeah, you're familiar with this. Right, so I don't have to discuss this in too much detail. Okay, the RIP5 is basically
No.
that document, okay, that's going to help you reconcile not this period, but this period. Okay, you're looking at whatever happened from that point in time to that point in time. And you have to reconcile with SARS because does your employer submit a return to SARS?
Yes, they do.
Yes, they do. See, the employer has a relationship with SARS. Do you submit something to SARS?
Yes.
Yes, and that's why you've got those two separate considerations. Okay, both are
Yeah.
important. Right, and the reconciling process, this return that you're submitting every year, is a process of reconciliation. It's just a process of checking. That's all it is. Okay, and sometimes you might have paid more than you're supposed to during the tax year,
Yeah.
because of your rebates.
Yes.
Okay, certain rebates apply, and then you might even get more as a refund depending on what applies. Okay, all right, perfect. Okay, good job, Melanie. Melanie, let's spend some time. Do you have those two questions? Can we look at them quickly? I think the due date is
Yes,
today,
please.
even, I think. For assignment
Yeah,
one, when is the due
yes.
date? Let me open
Well,
it.
they said it's today, but UNISA released a statement saying that all assignment ones are now due on the 24th of April.
Oh,
But I'm
wow.
still
Okay, so you've got
submitting my
lots of
assignments
time.
as normal.
Okay,
Yeah.
yeah. So I thought it was, yeah, because I remember seeing your email and then obviously the dates had changed. So, I mean, if it's just two questions, we can look at it now if you want to. Is that okay?
I am.
Sorry, I lost you there. Is that okay?
Sorry, you were saying?
I'm saying if you want to look at those two
Hello?
questions, we can look at it now. Is that okay?
Yeah.
All right, perfect.
Yeah, that's fine.
All right, which two did you have problems with?
Question 25 and 28.
Okay, let's go look at it.
It actually starts at question 24 because it's a long question about a small business corporation.
Oh, okay, yeah. If it's a small, if it's an SBC, okay,
Hmm.
this is going to take us quite some time to do it because it's obviously a working. Have you covered that SBC yet? Because you said you only
Yes, I
covered the
have. I
first three
wasn't sure
chapters,
about
right?
yeah. I wasn't sure which basic amount to use. That was the
Okay.
only confusing thing for me
All right. Let me just
about
see
the
here.
basic amount.
Select. Oh yeah, study units 1 to 3. Okay, so they did say 1 to 3 here, because sometimes they say
Yeah.
1 to 3, but then they test things in other chapters.
Okay.
Okay, so if you're looking at the basic amount, if you're looking at the first provisional tax payment, there's a table that you need to refer to. I'll show you which table you need to look at. It's this one.
Okay.
Let's get it. Where's the provisional? Here. Okay. Where's the table though? There we go. Okay, so when looking at provisional tax payments, let's go back to the question. Okay, question 24 said, is this the one that you had problems with, 24 and 25?
Uh, 25 and 28.
Oh, okay, 25 and 28, these two, not for 24. Okay, sorry, this one. What is the basic amount for the first provisional tax payment? Okay, so we
Yes.
go to our notes. Okay, I've got it actually there. Okay, first provisional tax payments, estimated taxable turnover times the applicable tax rate. So let's go look at the criteria. Where is it now? Here, SBC. Okay, there's the provisional small business corporations. Here. No, this is not the provisional taxpayer. Too far. It is this actually, because you got the farmers, you've got the non-farmers. There's it. Sorry, it's further down. That's the right. That's the right note. Okay, there. Calculation of provisional tax. Okay, the basic amount is deemed to be as follows: the taxable income assessed by the commissioner for the latest preceding year of assessment, less any capital gain. Okay, so we need to write down dates here. Ooh. Let me just. Okay, let me just put the separate so I can alternate like that. Okay, that's better. Okay, so taxable income assessed by the commissioner for the preceding year of assessment. First thing we need to do when we look at a question like this is we need to identify what is the current year of assessment. So let's go read the scenario. Okay, SBC with the year end 31st March there. Okay, 31st March is the year end. Okay, they say the 2019 year of assessment was assessed on the 20th of October and the taxable income amounts to that. So, 2019 year of assessment. If we're looking at the 2019 year of assessment, we would have started in April 2019. Okay, up until March 2020. Right, so if I'm focusing on the year assessment, this was assessed on the 20th of October 2019. Okay, and that's obviously a few months before the 30th of March. Right, what other dates do we have here? The income for the 2018 year of assessment, that's the previous year. So 2018 is last year of assessment, last year. Okay, that was assessed on the 3rd of January 2019. Okay, that's obviously the start of this year. Okay, then they've read that. Okay, on 31st March 2020, so on this date, okay, you've got, how much was it? 400,000. No, 480,000. Okay, 480,000 for the 2020 year of assessment. Okay, there's 2020, end of 2020. The taxable income was estimated to be 480 for the 2020 year of assessment. Okay, we read that. On 1st June 2020, the 2020 year of assessment was assessed and the actual taxable income amounted to 500,000. So 1st June is late on, it's in the next tax year, 1 June 2020. So we have that as well. Right, so now we've got all the dates. We've got 2018, 2019, 2020, and 2020. We've got March and we've got June. Okay, so let's go back to this. The taxable income assessed by the commissioner for the latest preceding year of assessment. Right, so the question said, what is the basic amount for the first provisional tax payment? Right, if the year end, what is our year end? 31st March. Okay, so if the year end is 31st March and we're looking at the latest preceding year, it would be last year. Do you agree?
Yes.
2019 year of assessment. Okay, what is the 2019 year of assessment? Let's see. 380,000. Okay, then they said the latest preceding year of assessment is deemed to be the assessment relating to the preceding year of assessment, which was 380,000. The 2019 year of assessment. Okay, where a notice was issued more than 14 days before the date at which the current provisional payment should be submitted to the commissioner. Okay, the current provisional payment needs to be presented 6 months afterwards. Okay, let's see what else do we have here. Okay, the basic amount must be increased by 8% per annum if the date when the basic amount must be calculated is more than 18 months preceding the year of assessment. Okay, if it's more than 18 months, it's not more than 18 months. 18 months is a year and a half. Okay, we have the current year of assessment. All right, so the basic amount is deemed to be as follows. The latest preceding year of assessment is deemed to be, okay, that's the preceding year of assessment, which we know. Okay, we've got that. The latest preceding year of assessment less the taxable gain. All right, so the current year of assessment, which would be 2020. The basic amount will be increased by the preceding year, 18 months. No, year and a half, we don't need that. Okay, that was it. Yes. Okay, so if I'm looking at the 6 months, right, there's even a diagram here. You can even look at that. Okay, the first provisional payment would be there. Okay, first provisional payments. Right, so let's go to our diagram. First provisional payments would be, in terms of March, let's see, April, May, June, July, August, September. It'll be in September.
Great.
Okay, we have the current year of assessment for 2020, which was 480,000. That was the assessment. On the 1st of June, the 2020 year of assessment was assessed, and the actual taxable income amounted to 500,000. That's the actual, but that was on June. So if we're looking at the basic amount, all right, the basic amount would be this amount. The basic amount would be the taxable income assessed by the commissioner for the latest preceding year of assessment, less any gain. There is no gain here, so that wouldn't apply. The latest preceding year of assessment is deemed to be the assessment related to the preceding year of assessment, which is yes. Okay, where the notice was given more than 14 days before the date at which the current provisional payment should be submitted to the commissioner. That's the 14 days. See, we received within 40 days before the provisional payment, which isn't. Okay, remember the provisional payment is 6 months. So 6 months from March would be September. Okay, 14 days is, June is far away. Okay, so that one I wouldn't use. Do you see that? Okay, so I would use the latest preceding year of assessment. The basic amount is increased 80%. No, I'm not going to use that. All right, I'll use 1 and 2. I wouldn't use 3. Okay, so number 1 would actually be it. The basic amount would be deemed as follows. The taxable income assessed by the commissioner for the latest preceding year of assessment. Okay, so the preceding year of assessment would be 2019. That was the preceding year of assessment. How much was that viewed as? 380,000.
80.
What do they have here? Let's see. The 2019 assessment will be used, that is the 318, as it was not assessed within 14 days before the provision. Yes, that one's correct. The estimated taxable income for the 2020 year of assessment will be used. That is estimated taxable income. No, not the basic amount. They asked for the basic amounts. Do you see that?
Yes.
Okay, the taxable income for the 2018. No. The taxable income for the 2018 adjusted. No. Okay, so just to go back, just to show you that, yeah, number 1 looks correct. That one's right. Okay, the 2019 year of assessment. Why? Well, have a look. If you go look at the question, okay, the first thing I looked for here was year end. What is the year end? I wrote it down, 31st March 2020. Do you see that? Okay, so what is the current year of assessment? The current year of assessment is 2020. Do you agree?
20. Yes.
Okay, even here, when is the first provisional tax payment due? Which option did you go with? It would have been 6 months. So it would have been 6 months. So which one? Option 2, hey?
30th of September. Yeah.
There we go. See, you've already got it. There's
No,
my September.
2019.
2019.
2019 though. Yeah.
No, 2020.
Because 2020 is the current year.
2020 year of assessment due. When is the provisional tax payment for? Oh, for the year. Okay, fine. Agree.
Yeah.
It's for the 2020 year of assessment. Okay, so if it's for the 2020 year of assessment, let me just see now. No, and actually it will be 2020 because the 2020 year of assessment would be this. 2020 the 2020 year of assessment will be 2020 will be March. So if it's March 2020, 6 months down the line would be yeah, it would be 2020, Melanie. Why are you saying 2019?
Because the year end is the 31st of March 2020. So we're looking at the period.
Yeah, that's the year end. So the first
First
provisional tax payment
April.
will be
No.
6 months after the year end. Does that make sense?
It'll be after the year end.
Yeah, have a look. Okay, so have a look here. Here, 2020 year of assessment. Okay, that's the 2020 year of assessment. This is 2017, that's 2018, that's 2019. Okay, so 2019 and then you've got 2020. Those are the two different years. Do you see that? Okay, oh, okay, I see what you
Yeah.
mean. All right, I see what you mean. Okay, yeah,
Yeah.
it would be 2019 because they're talking about during,
The
not for the
first
next
payment.
period, not for the 2020 year of
No.
assessment. 2021. Okay, fair enough. Right, yeah, that's fine. All right, so yeah, if it's 2019, okay, 2019 year of assessment, okay, 2020 year of assessment. So 6 months. The first 2020 payments, okay, would be the year before. Yeah, you're correct. Sorry, that's right. Okay, yeah, your answer's fine. Okay, so 2019 would be okay. Right, so if we're looking at the 2020 year of assessment, it would have been for the last period. So it would have been for the 2019 assessed year. Yeah, so the 380,000. Maybe just to go back and just read that here. Okay, basic amount deemed to be as follows. Taxable income assessed by the Commissioner for the latest preceding year of assessment. C, latest preceding year of assessment. So if we're in 2020, the preceding year is 2019. Okay, the latest preceding year of assessment is deemed to be the assessment relating to the preceding year of assessment, which is again 2019. Okay, then they say here, where a notice has been issued more than 14 days before the date at which the current provisional payment should be submitted to the Commissioner. So if we're looking at June as being the date when it was assessed, when are we paying? September. Yeah, that's out. Do you see that?
Yeah.
Okay, so then those two are fine. And then the last one, the basic amount must be increased by 8% per annum if the date when the basic amount calculated is more than 18 months. It's not more than 18 months, so we don't need it. Do you see that?
Yes.
Okay, so the only option is number one, the first one. Okay, the latest preceding year of
Okay.
assessment, which in this case is the 2019 year. Okay, so 24 was 3. Okay, the 2019, yeah, I agree with that. Sorry, it's just the dates. If it's 2020, it'll be before because 2021 will be the following tax year.
Right.
Okay, 20 and then 26. No, 28 you said, eh?
28.
Yeah. All right,
Yeah.
assume the basic amount is 360. What will the second provisional tax payment be based on? Okay, so let's go back. Second provisional tax payments will be second minus the first. Okay, so it'll be the taxable income or the tax liability, okay, minus the second provisional tax payment will be the liability minus the first. I've written this. Let me rub this out. Okay, second would equal the tax minus the first. Right, so if they're saying the basic was that amount, so then we would look at, assume the basic amount is 360, what will the second provisional tax payment be based on? The taxpayer earned taxable income of more than 1 million and would thus base this. Did they earn more than 1 million? Let's go see. No, they didn't earn more than 1 million. It was less than 1 million, hey?
No.
Yeah, so if it's less than a
Yes.
million, that doesn't apply. Ooh, wrong page. This one. Okay, second provisional tax payment is here. There's it. No, 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 no. Here. First provisional, second provisional. There. For a taxpayer with a taxable income of 1 million or less, start with the lower of the basic or the estimated taxable income. Right, for a taxpayer of more than, it's not more than, so it's this one. Okay, we're looking at this one. That's the important one. Right, so lower of the basic and the estimated taxable income. What was the estimated taxable income? Let's go check. The estimated taxable income was 480,000. Do you see that?
Yeah.
Okay, and the basic is 360, so the 360 will be used. Let's read which option is correct. Okay, the 480 won't be used because it's less than. It's not more than. See? That's wrong. Okay, it'll be based on the
Mm-hmm.
actual taxable income? No. The taxpayer earned taxable income of less than 1 million. That's correct. And would thus base his second taxable payment on the calculation of the estimated taxable income of that? No. The taxpayer earned taxable income of less than 1 million and would therefore base the second taxable provision on the lower of the basic amount and the estimated tax. That's perfect. This one's right. That one's correct.
Oh,
Yeah, number 4 is correct,
okay.
and number 4 is using this, the second provisional tax payments. Okay, so you've got 3 categories. You've got
Okay.
1, you've got 2, and you've got 3. Okay, if it's number 1, you're looking at that million rand. If it's less than or more than, it's obviously less than, so you have to look at the lower of.
Less than. Mm.
Yeah, does that make sense? Is that okay?
Yes, it does.
All right.
Yes.
Okay, and then then the third provisional is obviously taking the second and the first into account. Now, are we happy with that? Is there any other ones? Are you okay with the?
No, no, no.
All right.
Yeah.
Okay,
It
yeah. So
wasn't that bad.
okay,
It's
great.
just
Yeah.
there's a lot of theory on the provisional payments, so it's just hard to make sense of all those
Oh,
things.
okay, yeah. I think I'll discuss it in detail on let's say Thursday, okay? Because it seems like you've gone through quite a bit of this content already. So I think maybe I overdid it a
Yeah.
bit with studying it one. But I think I'll go through studying it two a bit quicker because studying it two covers similar topics. You'll see that is, what is it called? The dispute resolution process again in that chapter. So there's quite a bit of overlap
Okay.
for chapter 1 and 2 in terms of content. So I'll try to go through that a
Okay.
bit quicker then on Thursday, and then we can spend more time going through chapter 3, which is looking at this provisional. With the provisional, all you've got to do is you've just got to look at this. I've even copy pasted these little notes in the slides
Yeah.
because they're so important.
Okay.
Yes, I literally when I look at a
Yes.
provisional tax question, I just relate it to these guidelines here. That's the formula you need. That's the formula you
Yeah.
need. That's the formula you need, and then you only need the basic amount, and that's everything you need to do the provisional. Here, this bit. Yeah, so page 49 is key,
Okay.
and then you've got this bit here, the formulas, and then it's quite easy to identify. You've just got to apply it correctly.
Okay.
Okay. All right, Melanie.
All right. Okay.
All right, so stay safe. I'll chat to you again then on Thursday. We can go through. Let's try get through 2 and 3, and then at least we've covered more, and then we can start with new sections next week. So then we're on track for the second assignment.
Okay. Cool.
Okay, perfect.